Mike, can we just finish with your framework, post-pandemic framework? We'll remember it well. It was hot and short. The cycle would be hot, but ultimately it would be shorter than what we'd seen previously. Now, Mike, it certainly was hot, and you got the equity market call coming out of the pandemic dead on. But Mike, does anything lead you to question the short part? Because I think that's where the conversation is quickly shifting, as you know, over the last couple of weeks.
Yeah, I mean, this is going to sound ironic. Okay, so as you remember back in January, I was concerned that everybody was too bearish, including ourselves, and that proved to be the right, I should have gone with my instinct. And now, though, I think the fact that everybody is saying that the recession risk is eliminated for the most part, including the Fed itself, right? They had called for recession back in March, at least the staff did, and they backed off that too. Like, I don't know if we need a full-blown recession, but I'm pretty convinced that growth is still slowing. Like, we're in a down cycle. Now, whether that leads to a full-blown labor cycle or not remains to be seen. I think most people have pushed out the recession call to 24. I don't think they've said it's eliminated. So it may be a 4-year cycle as opposed to a 3-year cycle. That's very plausible. I really like our boom-bust short cycle thesis based on the 40s, because I see the data really supporting that, John. And part of our note over the weekend, and you can appreciate this because you've followed it the whole time, is that we kind of missed this fiscal impulse, right? That was a big miss on our part. We thought the fiscal impulse would come at the time that they really needed it. The thing about it this way, they're doing 8% budget deficit spending when you have 3.5% unemployment. I mean, that's really unprecedented. So what's going to happen if we do get a slowdown next year? And I just think this boom bust thesis is still correct, and maybe the market's looking through it to the other side. Look, that's a risky proposition given where valuations are. It was a great idea to buy stocks last fall. We traded it. We didn't stick with it long enough. Okay. But I think at this stage, you need to be very selective for some sort of retracement, at least back to the 200-day moving average.